timing, the ever so important timing. Where are we with gold? We all know that gold at a secular level is going to rise, or we think, at least we think we do. And you know, but what's going to happen in the short term? You know, should I buy now? 1560, you know, seems a little frothy for gold for me to be like buying in right now, especially if I'm a trader. What do I do? Well, the rise in gold since August of 2018 has been so strong, same with gold shares, that a stronger pullback, stronger than the one that we've seen, is very likely. And it's not something that should discourage you from believing in gold. It's actually something that you should take advantage to buy. If you're looking to buy more gold, increase your holdings, wait for this weakness. This next chart that I want to show you is actually one of my favorite charts. We could actually have just a whole presentation based on this chart. This chart is the industrial metals versus precious metals versus the industrial metals. Basically, this tells us how are precious metals doing against resource metals. What is more valuable relative to the other and at different points. This chart goes back also about 20 years. And you've seen that over the past 20 years, when you have precious metals as a whole and resources as a whole, industrial metals as a whole, actually the resources and industrials have outperformed the precious metals, which actually is something saying that, you know, the economy globally has actually grown in the past 20 years, okay? Because we grow if we use resources, we grow if we use these things. We don't necessarily grow if we're using safe haven assets or, you know, instruments like gold. But the most important thing of this chart that I want to show you is that every single time the ratio has reached the top downtrend, that is basically, you can see it where it says precious metals too high compared to industrial metals, usually that has signaled a top. At least it has over the past 20 years for this ratio, which this basically means that for the foreseeable future, maybe for the next few months, again, not talking long term, not talking on a secular basis, but for the next few months, we are very likely to see resources outperform gold. Now, this could be that gold stays where it is while resources rise. It could also mean that gold falls. I am thinking personally that we're going to see a bigger correction in gold. Not that we're going to see, again, it turning bearish by any means, but it will allow me, in my personal opinion, to position myself even better. I don't know how many of you guys did over the past year and a half. We actually did really well buying near the lows, and we were selling very near the actual high. And I've had actually my positions in gold and gold shares reduced, waiting for a bigger pullback. The recent pullback to 1450 wasn't really that big of a pullback. I was expecting something below 1400. If we go back to that first chart that I showed you of gold, in the secular market, we actually see that blue trend, that secular blue trend that is actually coinciding with the 23-month of May, is exposing a very, very, very strong support level around 1350, okay? That 1350 is going to will coincide very similarly to that previous strong resistance of 1365. I think that this is a very legitimate target on the downside for a pullback in gold, one that I'm waiting to actually position myself better, buy more.